Hello and welcome everyone to my channel, The Quality Investor. Earnings season has already delivered drama this week, and after the bell on Thursday, Visa, ticker V, delivered their Q1 2024 earnings. Visa is just one of those businesses that always grows. They're a model of consistent stability in all phases of their business, and this earnings release again delivered on stable growth. So what I was looking for was total processed transaction numbers, since that is the main driver of revenue. Visa's main revenue source is from transaction fees and cross-border transactions. Basically, the more transactions, the more revenue. My initial thought when I saw that number was yet again, Visa delivered another solid quarter of growth. Visa saw growth in each of its revenue segments. They strengthened their balance sheet, but they did have lower than expected free cash flow. The market, on the other hand, was not impressed. They did fall 3.5% in after hours trading, and once the bell rang this morning, they're down over 2% as of right now. So what has spooked the markets about Visa? Let's get into it. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, hit that notification bell so you can know right away when I post more stock analysis content. We're looking here at the current share price of Visa. It's at 266.03. After the market has opened today, you can see that 2.4% drop that I described earlier. The market seemed upset at a slowdown in payment volume in both the last 3 months of 2023 and the first couple weeks of January. However, while the stock is having a bit of a sell-off today, is the intrinsic value of Visa actually lower? On the earnings call, management offered a couple explanations. On Q1 volume growth slowing down, the CFO stated that October 2023 was softer than expected, and there was a less favorable mix of weekends from the prior year, which are typically higher spend days. Though he did mention Thanksgiving spending was much stronger this year. You can see that slowdown in growth reflected in these charts here on the top. As far as January, the CFO noted that the deep freeze across much of the US accounted for the slower growth. In warmer parts like San Diego, growth was stable year over year. One thing to note, total payments processed was actually up sequentially to 57.5 billion from 56 billion in Q4 of 2023. Here we're looking at the consolidated statement of operations for Q1, and we can see that revenue is up year over year by 8.8%. And coming down to the operating income and, well, specifically the operating margin, that expanded year over year from 64.14% to 68.96%. So that's a positive. We want to see that margin expanding for the businesses we own. Also, earnings per share is $2.39, up over $1.99 from the year over year, which is a 20% growth. And a lot of that's driven by Visa's very strong share repurchase program. Looking at their guidance, you can see for Q2 2024, they're guiding revenue to upper, mid to high single digit growth. Again, reflecting some of that slowdown that we're seeing this quarter. The full year 2024 guidance remained relatively the same, with the exception of the operating expense growth. They were guiding high single digit increase on operating expenses to the low double digit. However, they removed that low end guidance, and now it's just the low double digit increase in operating expenses for the full year. Looking at their cash flow statement, you can see the disappointing free cash flow. They had operating cash of 3.6 billion and purchases of property, plant, and equipment of 267 million, resulting in 3.3 billion of free cash flow. That is down from 3.9 billion year over year. However, the reason for this isn't terrible. You can see that the net income itself is higher year over year from 4.8 to 4.1 prior year. And really it was due to them paying off accrued liabilities. You have nearly $1 billion in accrued liabilities paid off, and that resulted in the biggest downswing of the operating cash this year. So nothing to worry about too much there. You can see that even reflected in their balance sheet. You can see accrued compensation and benefits down to 816 million from 1.5 billion as of September 2023. And then even the accrued litigation down to 1.4 billion from 1.7 billion. So after digging into the numbers a little bit in this earnings release, this strikes me as a below average quarter for Visa, but nothing that really screams weakness in their intrinsic value. However, let's take a look at their valuation to see if Visa is a good buy in the market right now. So let's start with the growth rates I'm using to get to my final numbers. So for revenue, I'm using a 7% compound annual growth rate for the next 10 years. That's well below what their 10-year average is currently. And right now, if you go to ticker.com, The analysts there are forecasting about a 10% growth rate. It is pretty conservative based on that. I also have operating income growing at 7.5% and their operating margin expanding to 70%. Net income growing at also about 7.5% with the net income margin expanding to 55%. Earnings per share going a little bit faster at 9.5%. And free cash flow growing at 7.5% as well, with my free cash flow margin expanding up to 63%, which is actually in line with the historical free cash flow. You can also see these estimates are well below what they've done in the last 10 years. So plugging these numbers into my DCF model here, you can see that 7% revenue growth and that 7.5% free cash flow growth using an 8% discount and a 3% perpetual growth. I get to a discounted cash flow price of $285.84, which is good if you consider their current price of $267.38 after the small sell-off we're seeing today. And looking at their dividend and discount model, you can see Visa has an incredibly strong dividend. Their 10-year dividend growth is 18.5% annually. And using what they're going to get this year for $2.08 and growing that about 15% for the next couple years and then tapering down to 12% and then using a 7.5% perpetual dividend growth rate, that gives us a dividend discount price $478.28. So what value does this give us ultimately for Visa? You can see my discounted cash flow price at $285 and my dividend discount price at $478. The exit multiple is $225.63, and that's including American Express and MasterCard. So a quick point on American Express. I do not consider American Express a true comp for Visa, but I am including here for illustration purposes. And once you take the valuation average of these three models at $318.90, applying a 20% margin of safety, that gives us an acceptable buy price of $255.12. However, American Express's PE is bringing down that exit multiple quite a bit. So if we actually apply a 10% margin of safety, we can see the acceptable buy price of $287.01. And I think you can have that margin of safety because including American Express and the valuation comp does reduce that risk a tad. However, let's remove American Express from the equation. Now our only comp is MasterCard, which is to me the truest comp for Visa. And at that 10% margin of safety, that gives us an acceptable buy price now of $306.29. You can see here that Visa's PE is about 32.3. And right now, MasterCard is about a 37 PE. So that's where we're driving up that price for the exit multiple up to $311.33. However, because we're excluding American Express now, it might be better to have a higher margin of safety. So at a 20% margin of safety, that acceptable buy price comes down to right about where they were trading before their earnings release yesterday at $272.26. So I do think that sell-off today is creating a little bit of a buy opportunity for Visa. So overall, a steady quarter for Visa. They are selling off a little bit today. However, I don't think it's anything to be concerned about for the long term. Before we go, I do want to emphasize this is not financial advice, and I do own a very large stake in Visa. With that, thank you for watching today's video. And what do you think? I love the feedback, so please comment below with your thoughts. Also, please hit that like button. And if you found this content useful, consider subscribing to the channel and joining our community. Thank you and happy investing.